don't want to have so many changes within our tax laws every year, because that also makes your tax laws quite uncertain.
Government will not be changing any tax policies this coming financial year.
We take note that a lot of businesses have suffered during the COVID-19. Though also government coffers have been depleted because we haven't got a lot of revenues, we thought this wouldn't be the right time to add more taxes.
Instead, government has had to introduce tax amendments to enable clarification of some terms which were not clear before in a bid to ease tax administration.
Most of the things that are there are penalties for either not using or forging tax stamps, forging electronic receipts or not having them, and then not filing returns. So we have really upped up the penalties for non-compliance, because what we want to do is that we are going to generate a lot of our revenues from administrative effort of URA.
Some of these amendments include, under income tax, the redefinition of beneficial owner to mean a natural person who ultimately owns or controls a customer, or a natural person on whose behalf the transaction is conducted. The introduction of the definition of the legal person to include a natural person who either directly or indirectly has at least 10% shareholding or voting rights, and the inclusion of research institutions or organizations whose object is not for profit under exempt organizations. Under rental income, deductible expenses and losses allowable to taxpayers earning rental income shall be capped to 50% of their rental income in that year of income. Repeal of the deduction of interest expense incurred on a mortgage from financial institutions and applied towards the acquisition or construction of premises from which the rental income was generated. And change in computation of rental tax for individuals on chargeable income to 12% on gross rental income, among others.
This year we see exemptions for hospitals, those that are investing about $5 million US. And for us, we think, given the fact that we don't have any regulations in terms of how much hospitals can charge, we still feel this is something that needs to be thought deeper into. And maybe also the fact that we previously called on to government to change or make some changes, especially in terms of who benefits from tax incentives and exemptions.
In recognition of the need for more revenue collection, the government of Uganda prepared a domestic revenue mobilization strategy, a 5-year program that ends in January 2025 and is intended to strengthen Uganda's capacity to generate sufficient revenue to finance its expenditures.
The other one is to ensure that the goods that are coming in, especially imported goods, are not undervalued, because we are really looking at valuation. So now we have a system whereby we have indicative values of all items. When they come in, we shall say this shirt you're wearing costs $2 and the tax is so much, so there will not be so much dispute. We are employing scanners so that we will get to know what is in these containers without doing 100% physical verification.
Civil society points out that the first tax legislation Uganda had was in 1919, and that since then we have had tax laws that are not informed by a comprehensive tax policy.
It would have been very good to see that that framework is in place before the passing of this current budget, so that we know that we now have clear strategies to govern tax incentives, tax exemptions. But we see that there's still a criteria being provided within the Income Tax Act, VAT Act, Stamp Duty, and so on. But we feel it would be good to actually see that we're having a review of some of these incentives that have previously been given out. For instance, we see Bujagali Power Project getting an exemption, an extension of its exemption.
In spite of trying to widen the taxable base and implement efficient tax administration. URA was expected to collect 21.3 trillion shillings, but be as it may, this target is likely not to be met. Wadulo Markanold, UBC News in Kampala.